You should too. There's no pressure to invest. There's no sales charge either. All your money works for you.
Diversification made simple. Call 1-800-331-5100 for your free fact kit. Fidelity Investments. Common sense, uncommon results. Share.
How about a piece of pie?
Maybe.
You want to see a movie?
Maybe.
I can see you as a lawyer. You never give a straight answer.
And I can see you as an architect.
I don't know if I can see myself being an architect.
For the rest of my life.
Why not?
Life is short.
I want to have fun.
Maybe when I look back, I'll be
Happy I was a good lawyer.
Maybe you'll look back and be glad you schooled this Sunday.
Maybe.
"8:15 a.m. My partner and I just got the fax from Divine Office Systems.
She's a beauty, Joe.
It's a Xerox plain paper fax machine.
And with plain paper, the facts remain clear.
Exactly. Some companies can use thermal paper.
But not in our business.
We need the fax on plain paper. And with Xerox, the facts are clear.
Right.
And stay that way. For the right facts, for all your facts, see Divine Office Systems, 1326 Walnut, in the city.
This opening portion of Market Wrap is sponsored by the Travelers. You're better off under the umbrella.
Good afternoon, everyone, and welcome to Market Wrap. I'm Neil Cavuto.
And I'm Bill Griffith. There's the latest in financial headlines. President Bush choosing his words very carefully right now. The president called the economy, in his words, unacceptably sluggish today in a teleconference with NBC TV affiliates. But he added he did not want to talk the country into a deep recession.
I'm concerned about it. Now, people are hurting. And I think we have to do something. But it's not a question of complacency. It's a question of not being able to get through the Congress the very things that I think would help the economy.
The president, of course, may be especially sensitive about choosing his words these days. Last week, his somewhat offhand remark suggesting that banks should lower credit card interest rates was the first domino in a series of events that some say caused last Friday's stock market plunge. Neil?
Okay, Bill. Well, after a few volatile days, the stock market returned to somewhat calmer trading today. The Dow rallying early, helped by a strong upward movement in the Dow Component Merchant Company. But the rally later faded. Now let's look at the unofficial closing numbers and see what we're talking about. We've gone so far this week, again, a tumble, and today, I guess, a pause. The industrial's down about half a point at 29.3113, but the transport's making up some ground due to some late strength and some of the rail issues, ironically, up 4 1/3 at 1204.41. The utilities were slipping fractionally as the bond market was going pretty much nowhere, 213.51. Elsewhere, the advanced decline ratio, though, still running rather strongly in favor of losers over gainers by a little bit better than an 8-7 margin. We had 485 issues unchanged on the day. The S&P 500 losing 2/3 of a point at 378.81. The Amex unchanged at 374.25. And the over-the-counter market finally picking up some steam, about 2 3/4 points worth at 526.17. A broad-based pickup in the housing sector last month is being seen as a positive for the future of the U.S. economy. And the White House says that lower mortgage rates should help stimulate housing activity for the rest of the year. The Commerce Department reports that construction of new homes jumped 7.3% in October. Wall Street had been expecting no increase at all or even a decrease. But September's figure was revised downward to a 3.3% decline. Housing construction is often one of the first sectors to recover after a recession. But Warren Lasko of the Mortgage Bankers Association says it's still not all that strong.
Housing's been in a slump for a couple of years now, and it's in a painfully slow recovery. Last winter, housing was flat on its back. Now it's perhaps up on one elbow. So while we're seeing encouraging news, and it may help lead us out of a recession, prevent a double-dip recession, we still have a long ways to go.
Furthermore, in an encouraging sign for future activity, permits for new construction rose 5.4% last month to their highest level since August of last year.
Elsewhere, the bond market finally found a good reason for a sell-off today. The inflationary implications of that stronger than expected housing starts report. Latest offerings from New York State that were delayed because of unfavorable market conditions have also been mentioned as a bearish fundamental at the moment. But there is no shortage of paper coming to market. The Treasury today announcing it will auction $22.5 billion of 2- and 5-year notes next week. 13.5 billion of that will be in 2-year securities. That'll be auctioned off Monday, and 9 billion of the 5-year notes will come out on Tuesday. Those auctions, by the way, are early because of the Thanksgiving holiday next week. Here's how the bond market traded late this afternoon. It finally finished up 6/30 seconds at 101 and 3/30 seconds after being down about 6 earlier in the day, and the yield came down to 7.9%. Well, our guest right now says it appears that Washington has become much more sensitive to Wall Street. He's Greg Valliere, director of the Washington Research Group, joining us from our Wall Street bureau. I guess the Beltway's starting to pay attention to Wall Street up here, huh?
Well, this last week or so, Bill, confirmed one of my old adages, and that is never underestimate how badly Washington can screw up the markets.
Although Alphonse D'Amato last night says it's not his fault. The president has said it's not his fault. It was just a stock market thing.
Well, I think when you have a brilliant economist like Al D'Amato trying to set policy, occasionally something might go wrong.
I'm going to move on. Here's the scenario I'm hearing right now, Greg. The president is going to wait on 2 counts. On the political side to announce his election team, and he's going to wait on anything about the economy until after Congress goes out and until January when he starts his State of the Union address. You hearing the same thing?
I hear the same thing, Bill, and I think it makes a lot of sense. If you want to take a logical view toward the economy, I think he should wait until January, and maybe things will start to pick up.
Can the economy wait that long, though?
Oh, sure, I think it can. Maybe today's housing number was a harbinger. Maybe further interest rate cuts will help a bit. But economically, that makes sense. Politically, it hurts. And I think that if you talk to people in this town in both parties, they just shake their heads at what I call the 3 blind mice, Brady and Sununu and Darman, who are urging Bush to do nothing. Politically, it makes no sense.
But the president today, in that teleconference we highlighted at the top of the hour here, saying that he wants to come out and let the people know that he is aware of problems in the economy, that he is not completely out of touch. I guess he's sensitive to that kind of criticism.
Oh, absolutely. I mean, to be really cynical about it, this is a PR story, and whoever has the best spin on this story will benefit politically. And the spin for Bush so far has been terrible because he's been portrayed as someone who plays golf and doesn't really care. So now he'll talk about caring, but in terms of substance, I think he'll wait until a State of the Union address in late January.
Let's go back to the message Wall Street is sending the president then right now, or at least sending to Washington overall. What are they telling them? What kind of legislation would be favorable to Wall Street?
Well, I think what Wall Street would like, and talking to a lot of our clients, I think what Wall Street would like right now is for people in Washington to be quiet and go home. And Congress is going to leave for the year right around Thanksgiving, and I consider that a plus, the fact that they will be gone and things will settle down a bit. I think once Congress comes back, the one thing Wall Street doesn't want to see is an overstimulation or something that would kill the Graham-Rudman budget deal. And
they don't want investment tax credits, for example? They don't want a cap gains cut at this point?
I'd say if you looked at any of the possible tax options out there, the one to me that's the most intriguing is the investment tax credit. If they do that for, say, 1 quarter, for 3 or 4 months, something like that, that could have a nice little pop for the economy. They probably can't afford to do it for a whole year, but I think that would be a plus, and capital gains would be a plus as well. But the fear on capital gains is the quid pro quo, that somehow Bush would have to go along with higher individual rates or bust the budget. The price tag might be too much on that one.
Let me just get quick, because we're out of time, quick handicapping on the possibility of a lower tax, income tax for some Americans next year.
I think the wealthy could get another hit of 1 or 2% on the upside, and I think for middle America there'll be a little bit. I don't think it's going to be much, though.
All right, Greg, thanks. Greg Valliere of Washington Research Group joining us from Washington. We'll talk to you again soon.
Okay, when Market Wrap returns, Robert Maxwell's family is being asked to pay up.
And stay tuned for our review of the foreign markets later this hour as well. We'll be right back.
This umbrella. Those who carry the Travelers for business insurance carry a 127-year tradition of excellence, upheld by 35,000 employees dedicated to customer satisfaction, chosen by 50% of the Fortune 500. Open in case you want quality and service the Traveler's way.